Now is it the time for private banks to shine?
HDFC Bank merger happened. Lot of their ratios got messed up.
Where Paytm could be, what is the future? It doesn't sound promising to me anyway.
When there is a narrative that FIIs are buying, that's why market is going up. That is not necessarily right.
There is also a second wave of blow that can come up from SEBI. There was one single 5-minute candle with a fall of more than 150 points.
Public listed companies, they are the ones investing into India's largest sporting event.
For listed companies also, this is such a good marketing tool that IPL is being used for.
This company producing 25% of India's electricity. Yeah. So it's supposed to be a huge company.
Only when you're buying into any of these stocks, understand that you're buying it mostly into the story.
Let's have a green energy portfolio. I love consumer tech startups. A company called Sundaram Fasteners. They are developing parts for EVs, not just India. They're even exporting to Tesla.
So before getting into the actual topics, so let us quickly wind up what happened with the markets since our last podcast. So since our last podcast, on Friday, we've seen a very huge green candle, huge buying happening in the markets, and followed by the positive results from Maharashtra elections. We've seen a huge gap up again on Monday.
Absolutely.
But then after that, it was just a consolidation. And again, today being an expiry day, we've seen a huge crash again in Nifty, and it is closed below 24,000, which is very, again, sad to see, right?
So it was nearly a 4 to 5% bounce from previous week's low, which was major, right? And also we saw comments, because we shoot our podcast on a Thursday evening and it goes out live on a Friday evening. We saw a lot of comments also under last week's podcast saying that, hey, you said the markets are down, and then it went back up a lot on Friday. But we also said the fact that, hey, bounce back could happen. And I remember Nihal saying that it's a sell on a rise sort of a market. And that's what we're seeing again. Today again being a Thursday evening is when we shoot this. Thursday we see that Nifty is kind of breaking out or breaking down from the consolidation zone from the last few days and coming down and closing below 24,000.
And today, one thing to notice, how much of the selling pressure is. There was one single 5-minute candle with a fall of more than 150 points.
Yes.
So that was the intensity where the markets are shooting down. Right. But again, that is how we would ideally wrap up. Do you have any more points?
I'm not at all concerned by all of this market fall, because I'm looking only at Bank Nifty. I know traders don't care so much for Bank Nifty right now. But in today's high, right, Bank Nifty was only 3% away from its all-time high.
That's crazy.
That's crazy.
When Nifty is actually down by a lot, Bank Nifty is holding strong.
A week before, the narrative everywhere, across media, across people, where markets are crashing, it's bad, bear market, and Bank Nifty, one of the the largest indices of the country, is just 3% away from all-time high. I think it's crazy.
I mean, in between the day, it did fall, but still 3% away at today's peak. What is even a correction, bear market? There's nothing of that discussion which is required here, right?
That's what I change very quickly in the market, and then there are people like us again coming on camera, and I'm basically talking about media, which it's their business to sensationalize stuff. So even if there's anything happening in the market, it's their job to make noise out of it, because only then they can actually get their job done, right? So that's right. But anyways, I also remember in one of our last podcasts, we discussing that Nifty will have to cross 24,400 to 500 zone on the top to actually get out of a bad sort of a zone, and then maybe then we can start expecting Nifty to do at least better.
It was kind of a place from where we could expect reversal. That was a strong resistance zone. But again, it took resistance, and again it is coming back down.
So I think those same levels we can keep watching out for. Election high, right? That is what we said was going to be a support. From there, the market bounced back up, and that's true. And on the upper side, the 24,400 to 500 zone acting as a resistance. Will still continue to do so over the upcoming time.
The markets be here, and that's where I really want to speak about market feeds, option trading strategies. It was our very first week after Bank Nifty going away, and we trade on only Nifty options this week, and we are very happily ending with 1 to 2% profits even. Anyways, let's move. I think it's a bit too much about ourselves.
So here is where I want to propose a new style of the podcast that we're trying out here. So based on all of your feedback in the comment section of the last 2 videos, we are trying out something different. Here, instead of discussing 3 interesting stories in the same time frame, around 45 minutes to 1 hour, we are trying to discuss 9 interesting stories.
Right? So it's not, again, my point being, it's not specifically 9 or a 3. It's all about
What's
discussing interesting stories and trending stories and having a great discussion and giving maximum value and understanding what they need and giving that. So let's
It
do
is
that.
simply like three friends sitting. You hear some news from here and there, and you want to talk about it.
Yes.
Exactly. So we want to give a lot of value along with more entertainment because that's what people have been asking, entertainment. We understand that and we hope that we can provide that to you in this episode. So yes, this is the third episode of the Aftermarket Podcast. This is Ajay Ajit, this is Nihal,
Hello.
and this is Sharik Shamsdin, CEO and co-founder of MarketFeed.
Hi.
So now that the markets are done, let's get into the real aftermarket podcast. So what's the first story that we have to discuss today?
So the very interesting story, obviously, going the thing that is happening in the market right now, market shooting up and then falling back down. So it's like whatever has gained has lost. So when the market actually on Friday, we saw that huge green candle and then there is a positive gap up. So people are looking into some data and some facts and saying that FIIs are back to the Indian market. In 3 days, they have bought some 11,000 crores and lot of money is getting pumped into it. But that is not the actual truth, the whole truth, right? So once we can give that clarity to our viewers, they'll see what is happening actually behind the markets.
So I'll start there. So I saw those articles saying that one Maharashtra election, so FIIs are really confident now and they've started pumping in money. And two, the actual number, 11,000 crores being quoted around a lot, right? And if you notice those 2 days, DIAs were also net sellers. So things look like okay. It makes sense. But what actually happened was this exact Friday, it coincided with the MSCI rebalancing, as we call it.
What
right?
is MSCI?
So it's a Morgan Stanley index. So Morgan Stanley is a huge fund manager across the world and they have different funds that track different markets across the world. They have an emerging markets fund and in that India and Indian stocks have a certain exposure. And a lot of fund flowed into HDFC Bank, which is also at its all-time high today, right? And because of which the market also saw good bullish sentiment. And the money supposed to be pumped in was 18,000 crores. So the FIA buying should have shown 18,000 crores. But even till today, it's showing only 11,000 crores.
So technically, they have again sold some other stock or they have invested less.
So passive mutual funds or passive funds like MSCI, whatever, it has pumped in 18,000 crores. But active FIAs have still sold nearly 7,000, 8,000 crores. That's what we are seeing. So that entire media narrative is wrong.
I've been silent and I've been listening to this, and there's a lot of jargons being thrown around, like FIIs and DAs and buying and selling, and I think it's slightly getting confused. So I have 2 points here.
Yes.
So one is I'll do a recap of this.
Okay.
So recap of this saying that there is a narrative FIIs have bought 11,000 crores.
Yeah.
Something.
Right? And what you're saying is there is something called as an MSCI rebalancing, and that is a forceful action to be done by some institution.
It's like a passive mutual fund
Correct.
throwing money.
And they had to buy 18,000 crores or they had to buy 18,000 crore rupees worth of assets in the Indian market.
Yes.
And they did that last week.
They are supposed to have, we don't have exact data,
Correct.
but everyone assumes that is already
So
done.
they bought 18,000 crores worth of assets in the Indian market because they had to.
Yeah.
They had no option.
It's a compulsion.
It's a compulsion. And the overall data says 11,000 of buying.
Yeah.
Which means that if this compulsive action was kept aside, it is net selling by FIIs.
Yes.
Of
This is what
7,000
is-
crores.
Of 7,000 crores.
Yeah.
Which means that when there is a narrative that FIIs are buying, that's why market is going up. That does not
Not true.
necessarily right. Maybe the MSCI rebalancing helped, but now that compulsive action has moved away, so it is back to status quo, which is FII selling.
So
Yes.
here I
Now,
have.
that is where I want to come to my point number 2. I believe this is all again media bullshit which we are talking, right?
Okay.
We started with that. Media really wants to sensationalize. Market goes up, you speak about FII buying. Market goes down, you speak about FII selling. So there's where I have some interesting data. In the last 22 months, which is from the beginning of 2023, where we saw a good bull run in our market, right? Nifty is up by nearly 30% as of today from 2023 beginning, and Nifty was up 43% at its peak. So in this 22 months, 11 months, FIIs were net sellers.
Okay.
Okay.
And DIAs were net sellers only in 2 months. My point being, Nifty was in a bull run and FIIs were net sellers in 11 out of 22 months, which is 50% of the months. And Nifty still moved up. And there were multiple discussions by media, by people like us probably on YouTube. FIIs bought, market is moving up, sold, market is moving down. I think this is all just getting into...
No, it's. I feel it's only coming from the back of October. FIA selling record
Yes,
amount,
I
1
have
lakh
data.
crore.
In October, FII sold for 1,14,000 crores.
Yes.
Yeah.
So
Which is a record number. I agree.
This buying by FIIs actually broke a 38 session selling streak.
That
Was a huge streak, which was created by FII selling. They were selling every single day. And October, they sold a crazy number, which is more than 1 lakh
They've
crore.
been selling for the 11 out of 22 months as well, right?
Yes, they've been selling, but not with this crazy intensity.
I
So the
understand.
intensity also matters a bit here. So now, when people saw that they were buying, it was is the sentiment changing? Are they going to slow down the intensity? Nobody even said that, okay, they're going to come back with full strength. People were like anticipating, okay, at least they're going to calm down a bit.
No, I understand your point. I understand the narrative which is being thrown around today is wrong.
Yes.
I completely understand. I want people to actually be data obsessed and understand that, hey, when things like MSCI rebalance comes into the picture, it throws away the real picture. I mean, it's difficult to understand what's really happening. And what is really happening is FIs are still selling.
Still selling.
They're
That is
still
what we are
selling.
saying. That I
Even-
understand. But my larger point being, there isn't a lot of merit in discussing about are FIs really buying or selling.
So even when they were selling, market shoot up is your argument.
So I'm definitely not saying that looking into FII data, DI data is bad. I'm not discounting the fact that, hey, FIIs, it's not really important to look at FII data. I'm not saying that. I strongly believe in, while you study a company, doing a fundamental analysis, look into how much of FII holdings is there. There is validation. There is importance to money coming from outside. Their confidence in our Indian markets. I completely understand that. What I'm against is using daily FII buying, selling data and building a narrative around what will happen to Nifty the very next day, the very next week, what happened. All of those micromanagement by taking FII investment data of a day and predicting the next day, next week of sorts. I don't see a lot of merit there. I mean, don't even get into that is what I'm saying.
I agree.
Yeah.
It's just the 38-day selling streak and
I
the
agree.
trend reversal indication.
Absolutely.
That's all people actually cared about.
That
And
was
even that
worth-
narrative is wrong. So I think that we should move ahead into the
absolutely.
next
So
topic.
the
there.
whole narrative is earlier they used to find some parallels towards FIs investing and markets moving up. So that narrative is being there, but I don't think that we have to follow right now. And so now that we have some understanding that FI pumping in money is not taking our markets up that much. So let us move to the next very interesting topic, which is again the last podcast that we actually spoke about ELM coming in.
Yeah.
Margins being increased, ROI getting ahead. There is also a second wave of blow that can come up from SEBI. Do you have anything to say there?
Right.
Can
I
we
mean,
start with what is ELM? I
Yes,
think a lot of
correct.
people don't
Yeah.
know.
So ELM is extreme loss margin. So when you are selling options, when you are trading futures, you have to put up margin to the exchange, and there are different kinds of margin. I'm not going into all of those.
Yeah.
So basically, if you want to sell one straddle in Nifty, it would normally cost you around ₹1,00,000, right? So that's
So straddle is selling.
a call and a put option together. That's
And-
what a straddle is. Again, making things very simple. Thank you for that, Ajay.
A naked straddle
A naked straddle.
without hedges. Yeah.
Yeah. So when you sell a straddle, the margin requirement, which is the money that you have to give the exchange to sell that call and put option together, is around ₹1,00,000. Now that is what margin requirement is.
Yeah.
Now this margin requirement has multiple different components inside. I'm not going into that. And that different components put together is the ₹1,00,000.
Yeah.
Now exchange is saying that along with this, now you put up something extra called as extreme loss margin, which is 2% of your total exposure into Nifty.
Yeah.
If you're trading Nifty. And this will apply only on expiry day. On other days, it wouldn't be there.
Okay.
So the exposure is the total contract value of Nifty.
Yes, 2% of your exposure into Nifty. Nifty today is at what, 24,000?
Yeah.
Yes.
And the lot size is 25.
Yeah.
So 24,000 into 25 into
2%.
2%, which will come out to be nearly 20,000.
Yeah.
Correct.
Right. So we spoke about a straddle. We can talk about iron condors as well, because that's what we trade. So for context, iron condor, again, Ajay is looking at me, right? So iron condor is you sell a OTM call option and an OTM put option, and both the OTM call and put option will have hedges.
Yeah.
Right. So that's what an iron condor is. So normally, to sell an iron condor, the previous margin requirement was nearly ₹35,000.
Okay.
So even today, if you are selling, so if you are a positional option seller, you enter your positions on a Friday and you carry it on a Monday, Tuesday, Wednesday, and then you reach Thursday, which is expiry day. That's where the new circular kicks in, saying that on expiry day, the ELM kicks in, which is the extreme loss margin of 2% kicks in. So till expiry day, your margin requirement is only 35,000.
Yeah.
But on Thursday morning, it goes up to 55,000 rupees.
Oh, so that
All
is-
of a sudden.
All of a sudden,
Okay.
which is nearly 60% increase.
So I would take a trade on, let's say, Friday.
Correct.
And then I'm taking a trade with the 35,000 rupees for
Correct.
my hedges, whatever I
Yeah.
have. Then once I reach Wednesday, my still the current margin requirement is only 35.
No problems.
Thursday morning, when I see
Yeah.
my margin requirement should be 60,000, around 60,000.
Correct.
If not, there would be again low margin penalties or whatever will again
Yes,
kick in.
you would get squared off. There could be penalties and stuff. So if you were a trader, what would you do?
I would stop trading actively on Thursday, or
That's
at
one
least
option.
reduce my allocation
Yeah.
on Thursday.
Correct.
I would probably.
Or you cannot do on a Thursday. Ideally, you would do that on a Wednesday.
Yeah.
Right?
Yeah.
You will
Yeah.
reduce your positions on
Yeah.
a Thursday.
Ideally, I would just go with 50% allocation, or probably I would have to square up my positions on Wednesday
Correct.
evening.
That's another option. Another option, a plain vanilla option, is to maintain 60,000 rupees right
Yeah.
from Friday.
Yeah.
Whichever you do, like barring your changing your trading style, which is adapting, which we will anyways have to do. If you're not to adapt in terms of your trading strategy, your ROI is going to get hit, because the money your ROI is just a simple formula of the profits you make divided by the capital you put in.
Yeah.
So the profits you make is not changing, because the lots you are selling and the premium you're collecting remains the same, but your denominator is increasing.
Yeah.
Because of which your ROI will get hit. So in today's world, if you're not adapting to this, if you are to put this extra money, your ROI will come down by some 30-40%.
Yeah, that's huge.
Or else you'll have to adapt.
Yeah.
Okay.
So luckily at MarketFeed, our trading strategies do not trade a lot on expiry day. Our positions normally end mostly by Wednesday, and Thursday we might carry one or two legs here and there. So we have not been hit. But what is most important is what you said earlier, where why did SEBI even do this? SEBI wants to decrease the number of retail traders in India and want to reduce their losses, right?
Yeah.
They're losing
This is-
50,000 crores.
They are trying to protect the retail investors from losing money.
Correct. So this is one measure.
Yeah.
So what is dangerous or what is scary is now over the next 1 quarter, 2 quarters, they'll see by introducing ELM, by increasing the lot size, which is going to kick in January,
Yeah.
they'll watch the volumes and watch how retail is trading. Have they are they now trading less? Are they losing less? If they are not losing less, what will SEBI do? They will increase the Thursday's ELM. Today it's a 2% increase.
Yeah.
To 5%.
Oh.
And they'll also introduce an extreme loss margin of nearly 3% on Wednesday as well.
And the lot size increase will inherently mean that, again, your ELM is going to be huge.
Correct.
And
so
just
all
here-
put together, if all the lot size is going to happen, but this ELM going to 5% on Thursday and a 3% on Wednesday, that we don't know.
Yeah.
Might happen next quarter, a quarter after that, all depending on how SEBI is looking at things. But even all of those things are happening, again, only thing traders can do is adapt, change strategies, look at market in a different way. You'll have to rework on your strategies from a very fundamental point of view. You'll have to really work in a different way. But
Yeah,
yeah,
so-
interesting.
I have few numbers here. When you're looking into the options premium turnover in indices, right? September 12th, which was a random weekly expiry in September, the premium turnover was 75,000 crore rupees.
Okay.
Okay. September 26 again 71,000 crore rupees. So just to give you that it's an average number in September. October it had fallen, even though the circular was not in effect. But if you're looking at November 7th and November 21st, the premium turnover has reduced to 50 to 56,000 crores. The more important point is that it seems to be effective, right? Whatever SEBI is trying to do here, options premium turnover has decreased in October as well as in November. If this trend continues, I mean, overall, I would say they're trying to achieve or reach to the goals that they want to reach, which
That's
is
nice.
to
That's
So-
good
Yeah.
early indications, I believe.
Yeah. So now that we also covered this, let us move to the very next important or interesting segment or the topic, which is Mahindra launching their new EV.
Yes. I
finally
see.
done with technical topics. Back
Yeah.
to normal topics.
Right.
Yeah. So you would have seen Twitter, Instagram, newspapers, everywhere, Mahindra's new EV is getting flooded.
Correct.
And
And I think a month before, Maruti had also
with
launched
Vitara
yes,
coming
yes,
in,
yes.
and then Tata has already been, in the news for their
Leader
EVs.
in the segment, yeah.
So whenever there is in recent times, we are seeing so many brands are launching EVs simultaneously. People are actually being bullish on the EV sector. They are investing a lot of money in these automobile stocks. So do you think that is the actual right thing to do?
Let's start with the EV king in India, which is Tata Motors.
Yeah.
They hold a 72% share in the EV market in India as of October 2024.
So whatever 100 EVs are being sold, 72 are sold by Tata alone.
Tata in the passenger vehicle segment.
Got it.
Not sure about the commercial vehicles there. And if you're looking at the revenue of Tata Motors, and people equate this that they're the market leader in EVs and EV is going to be the future, so we are going to invest in Tata Motors. Right? Even
Yeah.
small cases do that for some matter.
Yeah.
But if you actually look into the revenue contribution of EV into Tata's balance sheet or their profit and loss reports, it says that EVs contribute only 1%, 1 to 2%,
Yeah.
which is insignificant.
Yeah.
So Tata, if you look at their revenue, it's crazy how much bigger they are than Maruti, even Hyundai India, even Mahindra for that matter. They're so much bigger. And most of their revenue is contributed by...
Jaguar Land Rover.
Exactly.
Yeah.
So most of their revenue is contributed by
Jaguar
Jaguar
Land
Land
Rover.
Rover.
Yeah.
So
And now
it-
they are also moving into the EV space.
Yes, absolutely. Yeah.
So they're moving into that space, but I wanted to point out for a fact that retailers are they're just looking at Warren Buffett's investing style or taking famous quotes from famous investors saying, know what you're investing into. And they're seeing, okay, Tata EV everywhere. And they went ahead, bought Tata Motors stock when it's not even relevant. So you have to be careful of that. Tata Motors went up because JLR has been performing amazingly. Just take the case of Defender. It became a huge worldwide phenomenon
Yeah.
where everyone started going crazy over the new Defender. Not
Yeah.
now,
Yeah.
3 years ago.
While you mentioned that, I just noticed that Jaguar is also becoming a global phenomenon for all the wrong reasons, right?
Getting
they're-
roasted.
Yeah, getting roasted actually. So their recent rebranding, so they came up with a new logo, and very interestingly, they had this 1 minute of launch video which had 0 cars in it. Right? It was all like ladies in very poppy colors and just walking, and a very different Jaguar logo coming up. So again, being in the news for, I don't know. I would
And
say
even
wrong
in the
reasons.
meme world, Jaguar logo and nothing logo is getting compared with.
No, that is
So-
because very interesting. So Jaguar, when they launched it,
Yeah.
their tagline was, and even in their Twitter, their description was, and their tagline everywhere was copy nothing.
Copy nothing. Yeah, exactly.
And what did nothing do? Nothing changed their logo temporarily to the same typeface of Jaguar, the
Yeah.
way, and they put their description as
Copy
copy
Jaguar.
Jaguar. Copy nothing, copy
Copy
Jaguar.
Jaguar.
So very, very
Think
interesting.
about the
wordplay.
marketing genius there, where
Absolutely.
nothing is chipping in and
Yes.
taking all the credit, or
Exactly. That's genius. No, I mean, definitely. So the guy sitting there, capitalizing on the opportunity is absolutely.
But
amazing.
again, when we see,
Yeah.
Yeah. Let's
Yeah.
come back to the
So-
point. I
so
understand.
coming back
Abhi
to the
being,
point.
What are you even talking?
Ah.
Let's come back to the point.
Coming back to the point, I feel Jaguar was already very insignificant to the brand. They were not making any sales. In fact, earlier this year, they said that they will not even be producing a single new car till the end of this year because they have so much inventory.
But this is where I'd like to come in, right? Because even now, his original question was, hey, now that EV is booming, new cars are being launched by multiple companies. EV cars are coming in,
Yeah.
and so should people be investing into EV car stocks
Yeah.
or EV stocks for that matter? And again, see where your conversation going. You're very much focused on Tata Motors, which a lot of people are buying. I know, and that is the problem, is what I'm saying. So people, when they think about EV, electric vehicles, they're thinking only about Tata Motors because, again, Ajay said the right reason. Warren Buffett has said, if you know, invest in what you know.
Yeah.
Invest in what you see,
See.
what you understand, what
Yeah.
you use probably. So Tata Motors is what people think about.
Yeah.
And I respect Warren Buffett, but at the same time, we have to be intelligent, right?
Yeah.
So when I strongly believe EVs are the future, few years down the lane, we'll see EVs everywhere, right? There'll be electric vehicles everywhere. The kind of IC engines we see wouldn't be there anymore. Now, given that electric vehicles are the future, is it only EV manufacturers who are going to benefit?
no, I think the infrastructure also should
Exactly.
support.
We should look at the entire infrastructure. I was looking into this data, and it's very interesting, right? So, absolutely, your EV manufacturers like Maruti, Mahindra and Mahindra, Tata Motors, Ola Electric, Ather,
MG coming in.
yeah, and public companies
Public-
like your Hero, Bajaj,
Yeah.
everyone
Yeah.
should be invested in. Absolutely.
Yes.
But there is a larger game being played in the ecosystem or the infrastructure, like he was rightly mentioning, right? So you have your battery and EV charging infrastructure, you have your Exide, Amraja batteries, Tata Power for that matter.
Yeah.
Great potential there. But what is even more interesting is EV spare parts. So there is a company called Sundaram Fasteners. They are developing parts for EVs, not just India, they're even exporting to Tesla.
Oh.
Right? Tesla is a customer for Sundaram Fasteners.
Interesting.
You have Endurance Technologies, you have Sona Comstar, you have Motherson. So these are again very interesting companies which are getting benefited from the EV boom in India. Then you have EV IT companies like KPIT Technologies who are again developing software for the EV boom which is happening. So my point being, when the EV booming is happening, the eventuality is very clear that the future is going to be EV, electric vehicles everywhere around you. The narrative should change. Narrative should change from EV manufacturing companies to the ecosystem stocks, because I believe a lot of money is to be made there.
I
So-
still stand my ground because I still believe if you're looking at the revenue today for any of these companies, even Sundaram Fasteners for that matter, I'm just giving my hunch here. I believe that portion of their sales will not be a majority. Maybe since they're exporting, Tesla might be their major customer. I might be wrong here. But for Tata Power, for say any of the other companies, the revenue that they're making from EVs today is going to be insignificant compared to their total revenue and profit numbers. So when you're investing into a company, again, even if it's ancillary or auto sector stocks, you still fall into that trap. You're buying the story, but then the story is not what the company is actually doing and selling right now.
No, this is where I'll have to come in and say that, remind you that a company's valuation is based on discounted cash flow.
Future
And this
multiples.
Future, yes.
Yeah.
So
Future multiples.
discounted cash flow accounts for what the company could be in the future. So if it is a small portion now, what you're buying into is the story. What you're buying into the potential that it will grow into. And EV is something that the world is only moving towards that. And if these companies are first movers and best movers here, and if it is a high certainty that these companies could be the eventual leaders here, isn't this the best place to get in?
I feel it is entirely getting commoditized. So brands will remain. So brands like Maruti Suzuki, who I think will be the real winner of this race because they know what the Indian customers want.
I
And
understand
they
that.
will
So my-
eventually get parts from all of these different players. There will be hundreds of different suppliers. They'll get the parts and then it's just another car.
So my point being, so if I am to invest in anything, say this is a theme, right? EV as a theme, and I have to invest my money into EV as a theme. So my question is, and if I have to invest say 1 lakh rupees, will I invest my 1 lakh rupees only into Maruti, Bajaj, M&M or sorts? Or will I also include a battery player, ancillary player, IT player also, so that my portfolio has a better chance of winning?
Perfectly agree.
Yes, that is
But
all my point.
my point again is that only when you're buying into any of these stocks, understand that you're buying it mostly into the story. I know the story has a value.
Story
it
has started playing out, and I
and it
don't
has
have
a
real
value.
numbers here. These companies are investing heavily into
Future
getting
growth.
better,
Yeah. So-
and focused only on the EV.
So
story,
I
right?
understand now here that Sharik's argument is saying that you should just not focus on one segment where Maruti or Tata or someone who's collecting all the raw materials and building a product. But there could be some underdogs who are actually building the major components for this, and those companies can also benefit. And there could also be some infrastructure, some chip company that is making chips. All of these could benefit. So the larger question is, if somebody is bullish on green energy and they want to create a portfolio of these stocks, where there could be automobile stocks, there could be
Correct.
infrastructure stocks, there could be spare part,
Absolutely.
whatever. So
Absolutely.
if I want to, or our viewers want to invest in green energy stocks or that basket, where should they invest? How much should they invest? What is the potential?
I mean, this is more like asking for advice, exact stock tip sort of a thing, which we normally don't do here. But again, so we did throw around multiple stock names here, and I believe these are real good companies which could benefit from the EV boom which is happening.
Not in the green energy. I think that was a mistake.
Correct.
You meant EV
EV
stocks.
stocks.
universe.
Correct.
Got
So we can look into mutual funds or some other basket of stocks which are looking into this sector, and we can invest there.
Again, my larger point being, so if you are to create a portfolio of stocks, even within that create segments of EV manufacturers, EV ecosystem enablers and stuff like that. So that's the point. Yeah, that's it.
So now that we are anyway talking about
Green energy. Yeah.
electricity or EV cars and everything, there is an interesting IPO that came up, which is NTPC Green
Yeah,
Energy
yeah.
IPO.
Beautiful.
This is where even Ajay was saying that currently what you're looking at is there is the other stocks that Sharik was mentioning, that their biggest revenue from the overall revenue, a small portion of it could be attributed to this manufacturing of, let's say, EV batteries or something. They're small portion only. But in NTPC, in India, they are the largest producer of energy in India right
Correct.
now. So now they are seeing that green energy is booming. So now their subsidiary, which is NTPC Green Energy, they have now listed it. So do you think people should look into those stocks? Those will have potential, and what are your thoughts there?
Ajay, you want to start?
Yeah. So just two numbers that I want to throw around here. I know Sharik is also very well prepared here. That's why he wants me to start first. NTPC has a target to reach 60 gigawatts of capacity, right? Green energy capacity by the year 2032. Now, Adani Green, who has been in the news a lot over the last
For all right and wrong reasons.
Yeah.
all the wrong reasons over the last week. Their target for 2030, not 2032, for 2030 is 50 gigawatt. And you see what's happening, right? Everyone wants to, and Adani is cool to invest in. But nobody is really caring about this Maharatna PSU stock that has come out with its IPO. So I feel when you're looking to the market caps also, Adani Green's market cap today is at 1.7 lakh crore, while NTPC's market cap is much below that at 1.07 lakh crore. So people can, if they're really buying into that story, the green energy story in India, they can absolutely look into NTPC, considering that they have much bigger growth targets than even Adani, right? I feel, and at a better valuation, I feel
Less-
And why wouldn't they have? That's my point, right? Why wouldn't they have better targets? Because NTPC Green Energy has now, as you rightly said, been carved out and is a separate entity now. So if you look into NTPC, and you rightly said, NTPC is India's largest power producer. They alone produce nearly 25% of India's entire electricity.
Huge.
And that I think is huge. And while in the previous topic we spoke about how much I love the future, in previous podcasts, you probably understand that how I also look at my players based on how well they have done over in their history, in their past, and I take my bets like that as well. So here in this case, I'm looking into the history. NTPC as a company is a PSU, is a government entity of sorts, is having all the favor of the government, and they're ambitious. And they, in the country of India, becoming the largest electricity producer, 25%, why wouldn't NTPC Green Energy play out a similar story in the coming years? Where you are also rightly saying the same thing. They could eventually go out, beat Adani Green, beat Tata Power, which again has a strong green energy portfolio. So all of them are going to get beaten, and NTPC Green Energy is going to emerge out as a winner. I think is a high probability, but that's where things are slightly mixed.
said the PE ratio.
If you have anything around PE ratio, maybe this
So
is
PE ratio is very high. So it's more than 300. So even when you say like it has potential, we still have to be a bit scared of the valuations being too out of hand.
Do you have data of-
Adani is not a good comparison any day, right? Because Adani had all the allegations that their stocks are being pumped by foreign entities.
No,
right?
no, my point was, while I understand that, my point is more like, again, I'm looking into history and looking into past performance and then taking a bet. Because anyways, we're not going to win a trophy if NTPC Green Energy is going to win or is going to beat Adani Green Energy in terms of having more supply or more gigawatts in terms of creating power, right? What are we even interested in? We want to invest in a stock and make money. That's what we are interested
Increase
in.
our wealth.
Absolutely. So NTPC as a company got listed in 2004. Today is 2024. So it's been 20 years.
Yeah.
Over the last 20 years, this company is now 25% producing 25% of India's electricity.
Yeah.
So it's supposed to be a huge company.
Yeah.
So in the last 20 years, the stock is up 660%.
Okay.
Sounds wow? Converted
Absolutely.
into CAGR.
Ah.
It's just 10% CAGR.
That's it.
Yeah. So again, the point being, so this company has played out really nice. It's become India's largest power producer. Huge story of sorts. But the shareholder returns aren't that great. So again, PSUs have this not so great thing attributed to them, saying that, hey, they do not make a lot of shareholder wealth, but they pay out handsome dividends, which is also a good part. But again, so now if you compare to Adani, If you look into the history of Adani stocks in terms of delivering shareholder value, that's more. So now I'm slightly confused. Again, that's where I'll go into my safer story of, hey, let's have a green energy portfolio.
Yeah.
Let's put Adani green there. Let's put NTPC green there. Let's put Tata Power there for that matter. So that's what I'll do. I'll definitely not sit out. I think this is a good opportunity. The company is definitely going to play out, but shareholder returns, I'm not sure what exactly we can expect.
So now if somebody wants to invest into NTPC, we can understand that NTPC standalone as a company has very good pedigree to do well in the country, succeed and know what they are doing. So if their subsidiary NTPC Green Energy is coming up with an IPO which is already out and their stock is listed, people who are sold on to the green energy story narrative and want to invest can consider NTPC that has better potential.
Yeah.
So now that in this discussion when Sharik was mentioning, PSU stocks often doesn't, give good returns to their shareholders. We have seen PSU banks giving amazing returns and most of other PSU
Last
stocks
year.
also last year giving good
Last
returns.
year. 2 years.
Anomaly of sorts, but yeah.
So they have given absolutely good returns.
Yes.
But yeah, so their PSU tend to perform at some point. Maybe that is what would happen with NTPC also. So then coming down to when we are talking about banks that given amazing returns last year, which is PSU banks. Now there is a news floating around, or the fact is HDFC is at all-time high.
Yeah.
So now is it the time for private banks to shine?
I don't agree with that statement. I think it's just smart money moving around their allocation. And yes, the MSCI rebalancing or the money, external FII money getting pumped in, actually helping the stock move up. So I think while the rest of the market is on a correction phase, this look like an amazing place to hoard all of your money so that it doesn't fall too much, because the valuations are really good in HDFC. People don't know, or this is not an indication that it will continue to go up further from here. But I think for now, it's a safe bet for investors. That's why they're moving their money.
And like rightly he said, even our bank nifty was holding strong only because of HDFC.
Yes. No, private banks, as I see it, has been a mixed bag. So if you look from pre-COVID high till now, Nifty is up by nearly 90%. And while Nifty is up by 90%, again, pre-COVID high till now, HDFC Bank is only up by 40%. At the same time, ICICI Bank is up by 132%.
Oh,
Okay.
okay.
Also at the same time, Kotak Mahindra Bank is only up by 2%.
What?
Yeah. So it's
It hasn't moved.
Yeah, it hasn't moved much at all, right? But revenue has grown. So it's been a mixed bag. I don't think private banks had a great time. It's all mixed. There are certain smaller players doing well. Then there's this narrative that IDFC Bank is going to be the next HDFC Bank. But again, things haven't been that great for IDFC Bank also, for that matter, right? So I don't know. Private banks have been like really mixed. A lot of things changing in the ecosystem, in the industry. So yeah. That's all. Nothing much to add there. Is
So
what I
will
believe.
private banks again turn out to be good or not? Time has to tell.
Yeah.
One data point to bring in there. So when the HDFC Bank
Merger,
merger
yes,
happened,
that was
a lot of their ratios got messed up, right? So RBI asks every single bank to maintain certain levels of cash ratio to deposit ratio, multiple things, right? So all of their ratios got messed up because they were merging an NBFC with a bank. An NBFC cannot take deposits. A bank can take both deposits as well as give out loans. They merged this into a single bank. Things got complicated. And their loans to deposit ratio, it became really bad. They wanted to correct that. RBI asked them to correct that. They wanted to correct that. And aggressively over the last multiple years after the merger, they have been increasing their deposits.
Yeah.
In a time when people are saying, okay, banking sector is going to die because people are pumping in money into the stock market, HDFC has grown their already huge deposit level by 15% last year.
Interesting. Yeah.
That's crazy.
That's
I mean,
crazy,
at the
absolutely.
level they're in.
There was some crazy stat around how many branches HDFC Bank open on a daily or a weekly basis. I don't know. Like later, if we should show it here or something. But there's some crazy number. They open so many branches a day or a week or something like that. So they're definitely growing. Private banks, all of them are growing. Revenue are growing. Even when we say Kotak Mahindra Bank did not grow much in terms of share price, even their revenue has grown. So yeah, it's just mixed. Yeah.
So even keeping that private banks aside, there is also one more interesting fintech stock that is again making some noise in the market, which is everybody's favorite, or everybody who knows about that stock is none other than Paytm.
Yeah.
It is at its 52-week high.
Yeah.
So and I have a stat also there. From May this year to now, it is already up 200%. And it is at
Crazy,
52-week high. So do you think there is still steam left, or it's gone, or what is happening with Paytm?
Yeah, for audience who doesn't know what has originally happened from its IPO listing price, it
Yeah.
fell 80%. And after a stock falling 80%, even if it comes back 200%,
Yeah.
it's nowhere near the peak from which it fell. So that just is putting.
But
out the
again, this
context,
is
yeah.
where the counterparties are arguing, saying that Paytm's actual revenue is getting better or it is staying constant, but their profits are increasing. And in last year, I think they had some 1500 crore loss or something, and this year it is only some 600-700 loss. So they are saying from last year to this financial year, their losses cut down by 50%. So they'll be moving to profitability soon. So they'll have a turnaround story. What do you say?
Yeah, so when you're looking into, or if you're following the market news, generally, you might have noticed that Zomato recently did something crazy.
Yeah.
They went ahead and bought a ticketing business for 1,300 crores, is what the balance sheet says.
Yeah.
And who did this 1,300 crore go to?
Paytm.
Yeah.
So Paytm insider, or
Yeah.
that insider is what they bought, right? So this 1,300 crore will be showing up in their P&L statement as an one-time exceptional item, and that has come in.
Yeah.
Despite this 1,300, it should have been pure profit, right? You
Yeah.
imagine you selling an asset should have been fully realized.
Yeah.
They only have 800 crore in profit last quarter.
Yeah.
So still on a quarterly level, they're bleeding money. At an operational level, their revenue is not increasing. Their operating profits are not increasing. It's the same story there.
So just by looking at this financial year report, considering that Paytm might turn profitable could be a wrong narrative. But again, there is again a very interesting question or curiosity people get into the people's mind about Paytm is what do they even do?
Right. So no, that has been a problem with me, right? So with Paytm, see, I love consumer tech startups, and when they go public, I think it's a huge opportunity for people to take part and build wealth over time. And we have seen this playing out in the US as well, right? A lot of tech startups leveraging tech, building for the masses, who could scale and change the world for that matter, right? Make lives better sort of stories.
Yeah.
Like that's what is happening with your Zomato, with Swiggy, and could have happened with Paytm also. That's what I believe. Again, a tech startup leveraging tech, building for the masses, consumer tech for that matter. But it's really mixed with Paytm, right? I really love the story. Vijay Shekhar Sharma, the founder, is someone I think almost all top entrepreneurs, people in the limelight today, they would have looked up to him back in the days, in early 2010s and even before that probably.
He was an inspiration to so many.
Absolutely. So that kind of a man with the backing of SoftBank, building something huge, building a brand. Like everyone's talking about Paytm. Everyone knows Paytm.
Yeah.
The Soundbox was like everyone knows. So they clearly built out a huge brand. So I love all those things. I love the consumer tech angle. But what the larger problem for me is what you asked. What do they even do? So when I think about Paytm, I remember them, I don't know, like selling tickets, me using for them to buy maybe a train ticket or to recharge my phone. Then they had their wallet in between. Then they said they are a payments bank. And they did a lot of these different things along the way. And now it's kind of not clear what they really even do. So that's definitely a problem for me.
So
They make money three ways generally is what I understand. And the largest two ways are either selling financial products, they sell insurance for other people, they sell loans for other people, or they have their own payment solutions like payment gateway or their own UPI payments and everything. This is all they do. And rest everything, it's only forming a small part of their revenue today, which is, let's say, all your ads on Paytm, all that is a very small part.
But wait, there was a Paytm mall in between, right? What even happened to that?
again, they tried to get into e-commerce and they tried to build something. Lack of focus, like you said, and venturing into so many other stuff. Eventually, they had to fail. They failed. But again, when we see where Paytm could be, what is the future, it doesn't sound promising to me anyway.
Yeah. So talking about again how they started, one interesting point. Paytm, when I searched for Paytm, they started in the year 2000. And what were they in 2000? Have you ever thought of that?
IT service or something like
No,
that.
they were
so some telecom. So they had something with Airtel and something in the telecom industry, right?
No, they were a news, cricket score, ringtone, joke website.
What?
This is what they were. And
Okay, then
from
probably
there they
there's something with telecom as well down there.
might be
journey.
the
Data.
ringtones.
I think they
Earlier
were
you
the
had to
first
set.
one to give online recharge or something. They started.
No,
Is
that
there
is
something
all
like that?
multiple years later.
Yeah.
Okay.
This is Paytm was founded in the year 2000. That is 24 years ago today, with a very young Vijay Shekhar Sharma. And by now I feel, and it was an amazing story as Sharik said. But by now I feel he has lost the public's trust as well as a lot of investors' trust, right? Especially with the Paytm payments bank scandal and how they infamously got banned by RBI.
Yeah.
Investors also have lost trust. So I think it's a horse that does not have any strength left. They're just bouncing. We have Citibank and UBS increasing their rating. So it's just early investors exiting, is what I think. Them facilitating that for their investors.
And let us wrap all of this market, finance, and all of this, right? Let us understand or let us get into very interesting stuff that is happening right now or recently happened is the IPL auction.
Yes.
So we have seen crazy numbers, right?
Yeah,
Rishabh
27
Pant getting to it.
crores.
Yeah, Shreyas Iyer going for 27 here. All of this.
Venkatesh Iyer going for some 23, 24 crores
Yeah.
was when
So
crazy.
everybody's putting lot of money and seeing IPL as a sporting event, like a very one of the biggest events in the world after football, FIFA, and everything. But it got me to an interesting point or looking it in a different lens. I see, okay, on a sporting event, it is on one side, but I again see for listed companies also, this is such a good marketing tool that IPL is being used for. So if you see, Sunrisers Hyderabad is backed by Sun TV,
Yeah, a listed company.
a listed
Yeah.
company. Then if you look into actual Mumbai Indians,
Indians.
it is owned by again who?
By Reliance Industries.
Reliance Industries. So there are so many IPL franchises which are owned by listed companies
Yeah.
and doing marketing.
Correct. Quickly putting Jindal, Delhi,
Yeah.
Goenka Group, Lucknow, India Cements, Chennai Super Kings.
Yeah.
So if you think about it, all these listed companies are actually running
RCB, infamously.
RCB,
Yeah.
and then you have Punjab Kings, Neswadias,
Britannia.
Britannia.
and so yeah. So definitely, so there is an interesting angle there where IPL is nothing but a culmination of entertainment and sports and business. right?
Absolutely.
And it's also an opportunity for all these business people to get into business
Yeah.
plus entertainment plus glamour, like we rightly said. So the whole point here is, so they are getting free marketing,
Yeah.
like you said. So there's this guy in Delhi auction table, right? For the last 3 years, we are seeing him a lot on TV, and I'm sure it's not just me. A lot of us recognize him, and he's a businessman who never was recognized before. Now he's
Yeah.
getting recognized.
Absolutely.
Same goes with even Vijay Mallya's son.
Yeah.
He was a nobody. I believe. I mean, we never knew about him, but then he started coming on TV. Same goes with Sanjeev Goenka. I'm really sorry. So the guy who's doing LSG. So Neswadia, I recognize him. So I think IPL was an opportunity for these business people to get their claim of glamour. At the same time, they're making money with it.
Absolutely.
Right? All these teams are making crazy money.
I thought the same. I actually thought that the Ambani family was going ahead putting their money and buying Mumbai Indians.
Yeah.
Or let's say even any of those other companies. The founders were investing their personal money. But I was surprised to see that the companies, right,
Yeah.
which these are public listed companies, they are the ones investing into India's largest sporting event. Now it looks okay,
Yeah.
right? Now everything has turned out well. But I can't imagine what would have been in the first years of IPL
Yeah.
when they told their shareholders, hey, we want to go buy a cricketing franchise
Yeah.
in a random league that has never come out. I wonder what that conversation
And
was.
look at now. The franchisee, which they are now using as a marketing tool, is making money for them.
Correct.
And then they are also getting marketing or promotions or whatever. So think about the genius who made this whole concept, right? Where for actually you to acquire a customer, which we call as CAC, you have to spend money.
Correct.
Here, something is making money for you when you're actually not spending anything and
Yeah.
getting a lot of promotions.
So you're getting money while your other businesses are getting promoted at cheaper marketing costs.
Absolutely.
While you build personal brand for yourselves, you get recognition. It's a beautiful world designed, right? IPL is
Absolutely.
IPL, I would say for the commoners, for normal people, it's blitz, glamour, and sports outside. But in the back end, there are businessmen really minting money and building brand for themselves.
Even talking about Ambani's sons or even Nita Ambani for that
yes,
matter, they used to come to every single IPL match.
Yeah.
They made sure they had camera angles set up
Yeah.
so that they're shown in every single match.
So she came into limelight only after Mumbai Indians
Exactly.
and stuff, right? Now
I
she
mean-
has her cultural center and whatnot, right? So yeah.
All the business people who were once hidden or not people know about actually came out to the stadiums. They got a lot of publicity. Not just these business people, right? There are again celebrities who got benefited a lot.
Yes.
Like Shah Rukh Khan for KKR, then Preeti Zinta for Punjab. So even for Telugu, it is Venkatesh. There are so many people who are not just business people, but also from the Bollywood or Hollywood or Tollywood, Collywood, whatever industry, also getting a lot of famous, and their movies are also doing well. So, I mean, when I look at as a different lens now, IPL looks very different to me. I see it's like a biggest cash cow or the industry. I mean, it's so amazing, and
It's a larger game of sorts.
it's just not cricket, guys. It's just not cricket, and I don't know. It's like an amazing event that is happening.
Yeah, so everything turned out well. So we're sitting here and discussing it in a positive way. But IPL from day one, I imagine that it has been profitable or at least not that loss making. That's the Indian business mentality coming through, I believe.
Absolutely.
So guys, I think we should wrap up today's topics. A lot of technical topics, stock market investing topics, and wrapping up with the general topic that we had about IPL here. So I think it was interesting, a different format even for us. I hope that you were also entertained between the conversations, and that you as a viewer or the fourth participant of this podcast, that you were also entertained. So this is us wrapping up the third episode of the Aftermarket Podcast. And do remember to let us know all your thoughts about any of the topics that we discussed in the comments down below. We already took your suggestions and feedback, and we're trying to improve things here.
Very much open to feedback, waiting to hear and like, in a
Fully-
constant endeavor to get better.
Fully pumped for that. So if you want to see smaller clips, we'll be releasing that in the Market Feed Clips channel. So go ahead and check that channel out. And as always, make sure you subscribe to this channel right here if you're watching us for the first time. So yes, this is Ajay Ajit signing off. See you all again. Bye-bye.
Bye.